TFSA for Canadians is a very tax-efficient registered account that you can use to grow your wealth tax-free. In this video, we are going to talk about what is a TFSA account, how it works, the annual contribution limits you have in it, how you can open one for yourself. Last but not the least, is it true you can invest tax-free as long as the investment stays in it? Hi, my name is Sunny and I make videos that affect a common man financially. A quick smash on the like button will help me with the YouTube algorithm and it will be highly appreciated. A tax-free savings account, or widely known as TFSA, is available for Canadian residents that provide tax-sheltered growth. For any investment income including capital gains or dividends, as long as the money remains invested in TFSA, it is not taxed in most cases even when it is withdrawn. This is a type of registered account like RRSP, meaning it will be registered with the CRA where you can use your post-tax dollars for investments and enjoy tax-free returns. It was first introduced in 2008 federal budget and came into effect on January 1st, 2009, whose primary goal was to encourage Canadians to save and invest long-term tax-free. That sounds so good, as all of us are looking for places to park our hard-earned money and get tax-free returns. In a nutshell, a TFSA is an account where Canadian resident 18 years or old can save or invest in. Income earned in this account is not taxed, while the account holder can withdraw money from this account at any time tax-free. The basic intent is that you can use it as an umbrella account where you can keep the investments up to allowable limits with a hope that they will appreciate over a period of time. Now when we are ready to retire, there is a lump sum available to you which you can withdraw tax-free at any time now or in future that will help you in your golden years. Now we know this is a tax-free savings account. That is why the government has put in the maximum annual contribution room for individuals up to which you can invest. As of January 1st, 2021, the total cumulative contribution room for an individual who has never contributed in TFSA is 75,500 Canadian dollars, has to be 18 years or older and resident of Canada for all eligible years. Canadian residents may only begin accumulating contributing rooms once they have reached the age of 18, which is 19 in case of British Columbia. Upon reaching that age, one can contribute to the maximum allowed limit for that year. Any unused contribution room for the past years will be carried forward as a cumulative total. So in a nutshell, if you don't invest in 1 year, you don't need to worry. Your contribution room for that year will be added onto the next year. Please go to the CRA's website for more details and I will leave the link in the description too. As you can see in this chart, from 2009 to 2012, the annual TFSA limit was $5,000. The government increased the limit for 2013 to 2014 up to $5,500 for each year. In 2015, they raised the limit to $10,000 for that year. For the time period from 2016 to 2018, they reduced the annual contribution limit to $5,500 for each year. And then in 2019 to 2021, they increased the limit to 6,000 Canadian dollars for every year. On the right hand side of this chart, you will see the cumulative total for all the allowable limits if you don't use it for that year. But if you have never contributed into TFSA, as of 2021, your total cumulative limit per individual stands at 75,500 Canadian dollars. The beauty about TFSA is that it is not dependent on your earned income like RRSP, but as a flat annual limit for every Canadian resident. Any withdrawal will increase the available contribution room not in the year of withdrawal, but on January 1st of the following year. If there is an over contribution in TFSA account, the individual will be subject to 1% tax per month on the excess amount that remains in their account. So you need to be mindful that you always be within the allowed limit. The biggest misconception about TFSA is that you put the money in this account and you get tax-free returns. In fact, TFSA is the name of the account that does not give you any returns by itself. Rather, the returns are given by the investments that you buy within this account. Your investments can be any which are RRSP eligible, like stocks, mutual funds, ETFs, real estate investment trusts or REITs, annuities, etc., to just name a few. Any appreciation of your holding within the TFSA, including the dividends, are tax-free that you can withdraw at any time. The only exceptions are the US withholding tax on dividends, where Canadians in most cases are subject to 15% US withholding tax on US dividends. But that is a very small portion of your growth, as appreciation is fully tax-free with just 15% withholding tax on US dividends. Don't you think it's a very good deal? In my humble opinion, this is one of the best investment vehicles available to Canadians to grow their wealth tax-free. That is why I always keep my TFSA account maxed out, where you can choose the investments based on your risk tolerance and time horizon. I understand there are some people who use this as a sort of everyday savings or an emergency fund where they withdraw the money whenever they need it. I think it defeats the purpose why it was started at the first place. The whole idea was to keep your money invested in TFSA for a long term. Give the stock market some time to do their part by appreciating your investments, and when you're ready to retire, you can have a big nest egg to fall back on tax-free. This is my take on the topic TFSA 101. If you like the content that I make, please help me and my channel by liking, sharing, and subscribing to it. Please feel free to write in the comment section about the topic I have touched base on today, and I would urge you to write if you want me to make videos about any specific topic. Thanks for watching. See you next time in the next video on your own channel, Sunny Snippets.